All right, and we are live. Hey, good morning, good afternoon, good
Good
evening.
evening.
We're all around the world.
That's
So,
right, wherever you
yep,
are.
yep. Hey, guys, thanks again for joining us for another webinar. I know this particular one has been one that's of a lot of interest to a lot of you since we have so many people from all around the world. So this should be very, very exciting. We're very excited to have a really awesome guest. So we've been getting a lot of questions in our groups, Eva's groups, my groups, about how do I sell as a foreigner or as a non-US resident on Amazon.com. So hopefully we'll get some good answers for you, at least get you started on your way and then go from there. So we have a very special guest and we're gonna go ahead and bring him on and I'm gonna introduce him to you guys and then we will get started. So, and guys, if you have questions, go ahead and put them in the chat, in the Facebook live chat. We're gonna see all those questions and we're gonna try to get through as many of those as possible. When it comes to this kind of stuff, it gets very technical and very detailed and very specific. So we'll try, but we may not get to all of them. All right, so with that, let me go ahead and add Stewart. Okay, now Stewart is going to be sharing his screen. Unfortunately, he can't come on video because there's some bandwidth issues. But let me go ahead and introduce Stewart. So Stewart Patton is somebody that I've been very fortunate. Eva's been very fortunate to actually do some business with. He has actually helped us out and is helping us out. We're currently a customer. I can share that. And when I was looking for a good international attorney, I went through many, and it took well over a year to find the right person that understood e-commerce, understood Amazon specifically, and understood the entrepreneurship and what it means to be living outside the US and all the implications. It's very, very complicated. So we wanted to make sure we made the best decision possible. And Stewart really has been, it really came through. So Stewart, I appreciate that. I know my wife works closely with Stewart much more than I do. And she just loves you, man, for all your knowledge and services and being able to, get the insight that we need. So Stewart Patton is a U.S. tax attorney and expat entrepreneur specializing in helping U.S. citizens who live and invest outside the U.S., understanding and optimizing their tax situations. Stewart has over 15 years of experience solving U.S. tax problems, providing U.S. tax advice, and helping structures for your business and investments. And Stewart grew up in Midwest City, Oklahoma, where I visited, very, very nice place. Then attended Texas A&M, where I also lived there, and the University of Houston Law Center, graduating magna cum laude and the Order of the Coif. I don't know what that means, but it's impressive as heck. Practiced for 12 years as a tax attorney in the 3 large law firms, culminating as a partner in the Chicago office of Kirkland and Ellis LLP. Stewart is currently a member of the Illinois Bar and is currently living with his family in beautiful Belize. So Stewart, thanks again for joining us. We appreciate it. And with that, let's go ahead and open it up to some questions.
Yeah.
Ava, sorry.
Go. No, I actually was just going to go ahead and talk about that because as we prepared, for you to have this interview, we had this question, or you had this question, where are the people in our group from? Yeah. And we have people that are, from US and selling in the US market. We have people that are expats that, like myself and Naeem at this point, who are also selling on the US market. But we also have international people who are not living or never lived in the US and are selling on the US market. So we're trying to understand and help our customers, our students, who are in any of these categories, to find the best advice. And that's why we wanted to bring you on. So with that said, take it away and share whatever you have to share that might help someone on this call.
Okay, great. Well, I've got some slides here. What I thought I would do is go through these slides and then, the slides kind of provide the basics and then we can get down into the details. Can you see my screen?
We see it
Yes.
now. Yep. Awesome.
Okay, perfect.
And Stewart, if you could just speak up a little bit, you're coming in a little low.
Okay.
Perfect. That's much better.
Perfect now. Yes.
Okay. Yeah, if it gets low again, just let me know, and I've got, I do a lot of this audio visual stuff. I've got multiple microphone situations I can do. So
Got it.
all right.
Perfect.
Perfect.
Okay, so thanks for the introduction, Naim. I appreciate it. Very, very nice of you to do that. So let's talk about U.S. tax and legal structuring. So we basically have three groups of people that I'm talking to here, and things like this are sort of dangerous for me to do, and potentially for you as well. And what I mean by that is that the best legal structure for your situation depends on what your situation is. Okay, so that's where you gotta you've got to start. So these three groups of people we're going to talk about are mutually exclusive, and so you will need to know which of these three groups you are in. Okay, and you can't kind of mix and match. If you're in one group, you can't use a legal structure that's in another group. You might have problems if you do that. Okay, so let's talk about this first and be clear. So the first group is resident Americans. So this is people who wake up in the U.S. And live in the U.S. Okay. The next group is non-resident Americans. Either expats or digital nomads. We'll get into that distinction here in a second. And so these are U.S. citizens and also U.S. permanent residents who live outside the U.S. on a full-time basis. So when I say full-time basis, I kind of basically mean that you spend less than a month a year in the U.S. Okay, but we can put a finer point on that if we need to. But the whole idea is that when you're in the U.S., you are visiting mom or grandma or whoever, and you are on vacation. You don't live in the U.S. for any part of the year. But I'm not saying that you are forbidden from entering the U.S. right to be in this group. So, okay. Then the next is kind of a weird term, but the technical U.S. tax term is non-resident alien. That's someone who is not in any of these three groups. Okay, so it's kind of defined. It's defined in the negative. Okay. All right. So you need to know.
So sorry, Stewart. Quick question there. So a non-U.S. resident alien. I'm sorry. Can you go back to that? So non-resident alien. So this would be somebody who's in Pakistan, wants to do business in the U.S. Correct?
Yep. That's someone who lives in Pakistan and who is not a U.S. citizen and doesn't have a green card. And, well, and they live in Pakistan and they're not a U.S. resident. So
the international seller. Got it. Okay.
Yep. So, okay. So that's you bring up a good point that let's say someone's living in Pakistan, but their dad was an American, and so by virtue of that, they are a U.S. citizen. Well, they're not in the third group because they would be in the second group, right? Because they would be a non-resident American, right? So
right.
All right. So there can be some subtleties here, and some like, for example, a U.S. green card holder, like someone can have a green card but then not really give it up properly, and so they may think they're a non-resident alien, but they still have the right to live in the U.S. if they ever want to move back there, and so they would actually be a non-resident American here. Okay, so and whenever I do consultations with people who say, "Hey, I'm not an American, and I'm selling on Amazon," the first part of the consultation is we're going to figure out who you are, and I've had some situations where I tell people, "Hey, guess what? You're an American," So okay, so here's one question that you should ask someone before they start talking to you about how U.S. tax works, and that question is, where did you go to law school? Okay, because U.S. tax is a body of law. And how a body of law applies to a particular set of facts, that's what lawyers do, right? So, and also CPAs can do stuff with tax as well. So I'm being a little bit, mean to CPAs, but tax is one of those topics that a lot of people are interested in, and so there's a lot written on the internet about it, and all you need to write something on the internet is like a word processor and like a WordPress account, and then off you go, right? So anyway, so be careful about who you listen to. So I can kind of skip this slide because Naim, gave my biography here, but that's kind of basically it in graphic form right there.
Yeah. And just to add to that point really quick, Stewart. So guys, I wasn't kidding, and Eva's not
Mhm.
kidding when we said we've looked years for the right person, because you're absolutely right. The
Yes.
first thing that you do is go on the internet and say, how do I save taxes? And the
Yeah.
amount of crap out there, and the amount of people who are professionals, and very easy to fall into that pit. So you've got to make sure, I mean, great point, Stewart, of, you know,
Yeah.
the degree and where the professional is coming from, so on, super, super critical.
Okay, so the whole point of the whole thing we're talking about today is what's the best legal structure for you to use when you sell on Amazon. Well, this is kind of where everyone starts, and it's the no structure. So it is a legal structure. It's like it's sort of the you know, I'm kind of getting into philosophy 101 maybe, but it's like you know, the not having a legal structure, you know, what's that Rush song? It's like, by not making a choice, you're still deciding. Or
You're still,
something.
yeah,
So, yeah,
yeah.
I think
You're
I'm
giving away your age there, man. I know that
yeah,
song.
yeah.
Yeah.
So,
Uh-huh.
you know, I mean, you can sign up on Amazon as just, you know, hello, I am Stewart the human. I want to sell on Amazon. Amazon will allow you to do that. It's just that it's a bad idea to do that.
Right.
And you know, the main reason is that
Right.
someone who buys something from you, if they choke on it or they slip on it or it falls on them or whatever, they can sue the person they bought it from. And you don't want that to be you, the human. You want the person they bought it from to be a legal entity. So that's the main advantage, is that simply by creating a legal entity, you are limiting your liability. Okay, so you want to
Right.
have some legal entity, and the legal entity that we're going to talk about for all three of the groups today is the limited liability company, or LLC. And so this is one of the types of legal entities that all 50 states in the U.S. allow you to create. Okay, so it's an LLC, and so let's talk about some terminology with this thing. So it's not a corporation; it's an LLC. So, you know, technically, you don't incorporate an LLC; you organize an LLC. And then there are two different types of people that relate to the LLC. The members of the LLC are the people who own it, and then the managers run it. So a member is just the LLC word for shareholder, and then manager is just the LLC word for director. Okay, and then um, an LLC does not have to have any managers at all. It could be what's called a member managed LLC. So it doesn't even have to have any managers. Okay, so this is the type of legal entity we're going to talk about. It was created actually by Wyoming back in 1975 as an alternative to the corporation. Like, you know, corporation's kind of a old, it's been around like forever, the 1600s or something, or even earlier,
Mhm.
probably in different forms. But a corporation is like, you know, very formal. You have to have like minutes of the board meetings. You know, there's lots of little requirements. But an LLC can just be run by the members. Whatever the member wants to do, the member can do it, and then that's the LLC doing it. So it's a lot more of a flexible legal entity, and easy to operate. Okay, so we're going to see how this LLC comes up for our three different groups, and so we're going to march through the three groups. Now, it may be tempting to turn your brain off for two of these three groups because you're only going to be in one of them. But as you'll see, the concepts that we talk about are going to kind of build on each other. Okay, so they'll come up. You know, stuff we talk about now for resident Americans, those concepts are going to come up even for non-resident aliens here in a minute. Okay, so what's the best legal structure for you if you live in the U.S.? Well, it's our friend, the LLC. What you would do is simply form a limited liability company in the state where you live. Okay, so here's kind of one point for resident Americans. A lot of times people seem to think that, like, you know, they're like, I live in California, tax is pretty high in California, I'm going to form a Wyoming LLC, and then I don't have to pay California tax on my
Right.
income from my Wyoming LLC. Well, it doesn't work that way. Okay, so here's a fundamental principle of tax that is going to come up again in the other two groups. You got to pay tax where the business occurs. And in order for anything to happen in the world, it's got to be done by people. So your Amazon selling business occurs where you are when you're running the business. So if you're waking up every morning in California, you got to pay U.S. federal income tax. You also have to pay California state income tax on your income from selling on Amazon, even if you create a legal entity in Wyoming or Nevada or some other state. Okay, so just form an LLC where you live. And if you did form an LLC in another state, then you would have to file paperwork in your state where you live, to technically get that LLC admitted to do business in that state. So it's really just easier to do it in your state in the first place. Okay, so now this LLC can be treated differently for US tax purposes. If you create an LLC and it has only one member, you are the sole member of the LLC. We call that a single member LLC. And sometimes you'll see that abbreviated as SMLLC. And that a single member LLC, if you don't make any elections for tax purposes, it's treated as what's called a disregarded entity. Okay, and the term disregarded entity is not a very good term. It's short for a longer phrase, which is that the LLC is disregarded as a separate entity from the owner. Okay, so the term disregarded entity kind of makes I mean, it's got the word entity, so it kind of means it's something, but actually the whole point is that it's not anything. It is nothing. So you live in California. I'm picking on Californians today. I don't know why, but you live in California. So you create a California LLC, and under the laws of the great state of California, that LLC exists and is something. And it is a separate person from you. It can sue and be sued. It can hold assets in its own name, all that kind of good stuff. But for U.S. federal income tax purposes, the LLC is a disregarded entity. It is nothing. It is disregarded as a separate entity from you. Okay, if you are doing your Amazon business with a partner, well, then you would create a multi-member LLC. You would both be members of the LLC, and so by default, unless you elect otherwise, then your multi-member LLC is going to be a partnership for U.S. tax purposes. Okay, again, this concept is going to come up again, even for non-resident aliens later on. Okay, so a multi-member LLC is a partnership. How a partnership works is that it's essentially the same as a disregarded entity. A partnership does not itself pay tax. At least it does not itself pay U.S. federal income tax. Some states are different. Like in Texas, for example, they have this thing called the margin tax. So in some states where you are, your partnership will itself pay tax. But for U.S. federal income tax purposes, the partnership does not pay tax. Instead, it allocates the income. That's the technical term. It allocates the income up to the partners, and then the partners pay tax on their individual returns. Okay. Now, in both of these cases, a single member LLC and a multi-member LLC, you can elect for the entity to be an S corporation for U.S. tax purposes. Okay. And so why would you want to do that? Well, if you don't elect S corporation status, if you operate through either a single member LLC or a multi-member LLC that's a partnership, then you are a self-employed human for U.S. tax purposes. Okay, you're the business term is like sole proprietor. That's kind of the term for whenever you operate without a legal entity. Well, here you do have a legal entity, but it's disregarded as a separate entity from you, or it's a partnership for U.S. tax purposes, and so it essentially doesn't exist, right? And so you are self-employed, and when you're self-employed, you get to pay U.S. federal income tax plus state income tax plus self-employment tax on all of your net profit. Okay, so both of these taxes apply to all of your net profit. And so that's the reason that a lot of people elect for their LLC to be an S corporation. The whole idea of an S corporation is that you take this net profit here in the middle, and then you bifurcate that net profit into two different buckets. You have the S corporation pay you a salary, and that salary is subject to U.S. federal income tax and employment taxes. Okay, employment tax, I'm saying a different word because technically it's different than self-employment tax. It's employment taxes, but the amount's the same. Okay, so it's only the salary portion that's subject to employment taxes. It's also subject to U.S. federal income tax as well. And so then you have your net profit above your salary, and so the whole thing is subject to U.S. federal income tax. But the net profit above your salary is subject to only U.S. federal income tax, right? It's not subject to the employment taxes. Okay, so that's the whole point of an S corporation, is that and there's a rule that the S corporation must pay you a reasonable salary, right? Well, isn't that a clear rule? No, it's not. I don't know what's it's sort of complicated. The whole idea is that the S corporation must pay you a salary that's kind of commensurate with the value of the services that you perform. Basically, the S corporation must pay you about the same amount that you would have to pay somebody else if you were to just sit on the beach and hire a manager to run your business. And the reason that there's that rule is that what would you do without that rule? Well, you would make your salary be $10,000 a year, and you would only pay the employment taxes on $10,000, and then the rest of everything you make, you would take it as an allocation of net profit above your salary, and you would pay only U.S. federal income tax on that, right?
So Stewart, quick question here. Obviously, this could be a significant amount of taxes saved based on the structure when it makes sense. Now, is there a general rule of thumb or kind of guideline on at what earning level or earning amount it begins to make sense to consider this versus just leaving it as a standard LLC?
Yeah, so this is where things like state tax can matter as well. So with the S corporation, what Naim's getting at here, just to kind of fill out the question a little bit more, there are some expenses to this, right? So whenever you have an S corporation, the S corporation itself now has to file a separate tax return, and then you have to do payroll. So your salary here has to go through like a payroll service. So this is not a free thing to do, So you really need this is not really a do-it-yourself thing. You need a CPA to do all this for you, and so that's why you want to think about, well, when does it make sense to do this? Because you got to lay out some money to do it, and so this is where I'm gonna say, go talk to your CPA, down the street in your state, because it can matter. It can matter on a state-by-state thing. Both because services are more expensive in New York and California than they are in Minnesota, and also there could be state tax differences for when you might want to do that, because states may actually treat S corporations different than an LLC that is a partnership or a disregarded entity.
Mm-hmm.
Got it.
Okay. All right. Well, we're done with you resident Americans. I specialize in international tax. That's sort of my thing. So you resident Americans are kind of boring to me. But obviously there could be more stuff to talk about here. But
Sorry.
Yeah. When it comes to the nitty gritty of like tax savings for resident Americans, this is when you're really getting into CPA territory, and so, just some things to know about are like, well, I guess the one big thing to know about is after the Tax Reform Act of 2017, there's this thing that people call the pass-through deduction. It's under Section 199 Cap A of the code, and it gives you a 20% deduction for income that you're earning from a business, and that's even if you're self-employed or if you have an S corp. So that's just kind of something to think about. That if you haven't yet started an Amazon business, it's like if you make $100 at working at a job, you pay tax on $100. If you make $100 selling on Amazon, you pay tax on $80. So that's kind of pretty cool.
Stuart, there's a question. One of our members is asking, what about C corporation? Since we're still on the U.S. residents, I figured I'll ask.
Right. Okay. So this gets a little bit complicated. Basically, C corporations are not something that are going to save you on tax until you're making a whole ton of money. Okay. And even then, they may not save on tax. So just a little bit of history, or let's just kind of just some background, I guess. An S corporation is a type of flow-through entity. There's only one level of tax. With a C corporation, there are two levels. There are two levels of tax. The C corporation itself pays tax, and the general rate is 21%. And then whenever you receive dividends from the C corporation, you pay tax on those dividends, and the general rate is 15%. Okay, so with an S, so before the Tax Reform Act of 2017, if we were doing this, 3 years ago, I would have told you forget about C corporations. Unless you were going to go public or get venture capital funding, then just forget about C corporations. Don't ever, you don't need to think about it except for those two situations. Well, that's because back then the C corporation tax rate was 35%. Okay. Well, after that, the C corporation tax rate is 21%. So now there are some limited situations that do involve other things, like in your mix of income, where it could make sense to use a C corporation. But if you're in that situation, you'll know about it because you'll have a CPA that's your CPA that you talk to like at least every month, and so for normal situation, normal people making normal people amounts of money, use an S corporation, and you don't want to use a C corporation.
Okay.
Got it.
Thank
Got
you.
We'll actually talk about a C corporation again here in a second for our next group of people,
Okay.
for non-resident Americans. Okay. Okay. Well, let's move on to these folks. So there's two different groups of non-resident Americans, and these are kind of my terms. These are not. Can you see my mouse, by the way?
Yeah.
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 Okay. I'll try not to move it too much, but I'll try to. I like to.
That's all right.
I'm talking.
It's
with my hands.
fine.
Okay. So two groups of non-resident Americans, and again, these are my terms. These are not technical tax terms, but I like to separate them out because they are really different. Okay. So expats are people who pay tax somewhere. Digital nomads are people who don't pay tax anywhere. Okay. So if you used to live in California, I don't know why I'm keeping these, and then you move to, let's say, the United Kingdom, or well, you are an expat because guess what? The UK has a tax system, and you got to pay income tax in the UK when you live in the UK. But if you left California and then you went to Chiang Mai for 3 months, and then you went to Phnom Penh for another 3 months, and then you went to, I don't know, Phuket to go back to Thailand, I guess, for another 3 months, and you're just bouncing around the world, and you're not tax resident anywhere because you don't spend more than 6 months in any country. Well, you're a digital nomad, and so and your tax structuring needs are different than expats. Okay, so this is another distinction to kind of get clear on where you are. Now, there's another group of people that I lump into digital nomads. So note that you're a digital nomad. That's what I'm calling you if you don't pay non-US income tax. Well, I've talked to a lot of people who are, let's say, you're living in Spain, but you're on a spousal visa because your wife is a professor at a university there. And so you're not supposed to work while you're in Spain. You're supposed to bake cookies for your hardworking spouse, right? And but instead, you're at the kitchen table working on your Amazon business, and you're not paying tax in Spain because you're not supposed to be working, right? Well, I'm going to reserve judgment on your being a scofflaw in Spain, right? That's not my business. But you are a digital nomad, right? So anyway, so you're a digital nomad if you don't pay non-US income tax, no matter why, no matter the reason. Maybe it's not a good reason, right? Okay. So let's go on to structuring for these folks. So so the general structure for non-resident Americans is a non-US corporation with a limited liability company below it. Okay, so let me talk to digital nomads first. Digital nomads are kind of a little bit easier to talk to because you're kind of the only tax that you're subject to is US income tax, right? So we don't have to talk about anything else, right? So the reason for two layers of legal entities is that whenever you live outside the US, the first thing is that you are still subject to US tax. Okay, so the US is the only country in the world that has what we call a citizenship-based tax system. Okay, so as a US citizen or as a green card holder, you're subject to US tax, even if you don't live in the US, even if you've never lived in the US. Okay, even if you were the first baby born on Mars to 2 American astronauts and you've never been to planet Earth, if you're a US citizen, you're subject to US tax. Okay.
Crazy.
Yeah. Okay. Let's see. Hang on a second. I'm trying to see. My slides are a little bit. I think I got them a little bit out of order here. But okay. So if you're a non-resident American and you're a digital nomad, then you're still going to be subject to U.S. tax. And there are 3 rules here that make it where U.S. tax does not work quite so well for you if you are self-employed. Okay, so if you only have an LLC, if the LLC is the only legal entity in your structure, then you are self-employed, like we talked about earlier, right? The LLC is disregarded, so you're a self-employed human. And when you're self-employed, there are 3 bad things that happen. First, you got to pay self-employment tax. Okay, my number's missing from here, but it's the same. It's about 15% up until about 130,000 actually, and then it's about 3% over that. And then there's this really bad rule called the 30% rule. Okay, and not a lot of Americans who live outside the U.S. know about this. I see it all the time that people don't know about this rule. So how the 30% rule works is that whenever you have a business where capital is a material income producing factor, basically when you have a business that takes money to run in addition to taking your effort to run, the IRS only lets you treat up to 30% of your income as foreign earned income. Okay, so foreign earned income, whenever you live outside the U.S., even though you're still subject to U.S. Income tax, you can make up to about $100,000 per year of foreign earned income without paying any U.S. federal income tax. So that's the main benefit for non-resident Americans. You're still subject to U.S. income tax, but on your first about $100,000 of foreign earned income, you don't have to pay any U.S. federal income tax. So, but if you're self-employed, then this 30% rule applies, and only 30% of your net income from selling on Amazon is treated as foreign earned income. Okay, so I run into a lot of people who make less than $100,000 of net income per year from selling on Amazon, and they're Americans who live outside the U.S. and they're not paying tax somewhere else, and they think they don't have to pay any U.S. federal income tax, but that's not true. They have to pay U.S. federal income tax on $70,000. Okay, and they have to pay self-employment tax on everything else. On everything they do. And then the final rule is called the scale back rule, and that's illustrated here. It's a little bit complicated, but basically, actually my numbers are kind of messed up here for some reason. Whenever your basically how the scale back rule works is whenever your gross income is over $100,000, the foreign earned income exclusion that you can use gets scaled back to account for the fact that you have deductions that you can use against your gross income as well. Okay, so the bottom line is, we're kind of getting into the weeds and getting into complicated stuff, but the bottom line is that whenever you are a non-resident American and you are self-employed, and also you're not paying tax anywhere else, then these three rules make U.S. tax work not quite so well for you. So you get rid of these three rules simply by having a non-U.S. corporation in your structure. So here's a little saying I need to put on a T-shirt or a coffee mug or something. The non-U.S. corporation turns all of that complication into compensation. Okay, so just like
Stewart, that's an amazingly sexy expression on a coffee cup. I think it'll sell really well.
Thank you. Yeah. So just like we were talking about earlier with the S corporation, where the S corporation pays you a salary and then you get an allocation of net income above your salary, it works exactly the same way for a non-U.S. corporation. So the non-U.S. corporation pays you a salary, and your first about $100,000 each year is totally free of U.S. federal income tax. Okay, and then the net income above your salary, you just have to pay U.S. tax on that. Okay, it gets allocated to you. It's called GILTI, Global Intangible Low Taxed Income, just because it's fun to have.
Great acronym.
Yeah, it's fun to have complicated acronyms.
Yeah.
And so, okay, so that's how tax basically works. And so, I keep saying the term non-U.S. corporation. Well, I like Belize because I live in Belize, and there's no Belize tax to pay here. So, to kind of fill out the structure a little bit, you could use a Belize IBC for this non-U.S. corporation, and then you would have an LLC below your IBC. And the reason for that is that it's just nice and easy to operate a business through an LLC.
Stewart, for those that don't know what an IBC stands for, international, can you spell that out?
Yeah, it stands for International Business Company. It's the type of company that's in Belize and like lots of other jurisdictions that just is kind of basically made for non-local people, non-Belizeans, who are doing business outside Belize to use. So, and the reason Belize is that, just like we talked about, you need a non-U.S. corporation because you get U.S. tax benefits for having a non-U.S. corporation. It makes U.S. tax work better. Well, let's not go through a whole bunch of complication to get those U.S. tax benefits. Like, you could form a company in Hong Kong, for example, to get those same the same U.S. tax benefits we just talked about. But if you do that in Hong Kong, you're going to have to do audited financials every year the Hong Kong way. That'll cost you $3,000 or $4,000 or $5,000 a year, U.S. dollars, not Hong Kong dollars. And then you have to do other complicated stuff. You have to have a local company secretary. You have to have a virtual office. So, there's in Belize, you don't have to do audited financials. You don't have to do any. You don't have to submit any financials to Belize. So it's just a whole lot easier. Okay, so that's the idea. Now, also, there's no magic about Belize. Like, I could name a dozen countries that are pretty much the same, like Anguilla, Nevis,
Right.
St. Vincent, Cayman Islands. It's just that I live in Belize. If I had married an Anguillan woman, and I'd be living in Anguilla now, and I would say, this slide would say Anguilla IBC. So it doesn't.
Right.
There's no magic to Belize. It's just that I like it. So, okay. So this legal structure, if you look at it from a tax perspective, remember from a U.S. tax perspective, remember the LLC is a disregarded entity, right? So from a U.S. tax perspective, you are doing business through a non-U.S. corporation. So you get a salary from it. First $100,000 of that's free of U.S. tax. You pay U.S. tax on your net income above the salary. But if you look at it from an operational perspective, you are simply doing business through an LLC, just like you do when you live in the U.S. And so the fact that you hold the LLC through a non-U.S. corporation is just like a little footnote that no one knows about, from an operational perspective. Okay. So let's switch over to our other type of non-resident American, which is an expat. So this is an American who lives in the UK or France or Germany or wherever, and they're subject to tax there just like a local person is, and they're paying tax there. Okay. Well, the non-US corporation you would want to use would be whatever they use in the UK or Germany or Botswana or Uzbekistan or whatever. The point here is that since you're paying tax where you live, tax might work better for you by using a local company. Just like when you live in the US, tax works better if you use an S corporation. When you're living in the UK, tax might work better if you're using a UK limited company. Okay, so this would be a conversation that you would have with your local tax person. And then, I think it still makes sense to have an LLC whenever you're selling in the US. Reasons for that are really things we'll get into here in a second when we go to the third group. But basically, whenever you're selling into the U.S., I think it makes sense to have a U.S. company to do that. And so here's a key point. So like we just talked about, digital nomads use the foreign earned income exclusion. But expats, your main U.S. tax benefit that you're going to use to lower your U.S. tax bill is the foreign tax credit. And how the foreign tax credit works is that it's not a deduction, it's a credit, which is sort of a technical thing for tax purposes. How a credit works is that it is a dollar for dollar reduction in your U.S. tax bill. Okay, a deduction reduces income, right? And then so that obviously helps you save on tax because it reduces the taxable income on which the tax brackets apply. But a tax credit directly reduces your tax bill. So whenever you live in the UK or Germany or France or Australia, you're going to be paying a whole bunch of tax there. And so it's very likely that you're paying tax there at the same rate or a higher rate than US tax. So you simply use the foreign tax credit to reduce your US tax down to $0 a year. Okay. And so here's the key point in order to make that happen. If you have a non-US corporation, like you might not have one, okay, right? Because remember, like Naim was alluding to with the resident Americans, it might not make sense to have an S corporation at first. So if you live in the U.S., so if you live in the U.K., it might not make sense to have a limited company at first, right? So you might just have an LLC. But if you do have a non-U.S. corporation, then you want to elect for that non-U.S. corporation to be treated as a disregarded entity for U.S. tax purposes. And this gets very complicated and technical, but so this is something that it's sort of like I'm telling you now, and I can explain it to you later if we need to, right? But basically, if you elect for this entity to be treated as a disregarded entity for U.S. tax purposes, it makes the foreign tax credit work better. Okay, the reason for that is that the foreign tax might be paid by this entity and not by you, and you're the one filing the U.S. tax return. So we want you to pay the non-US tax. Well, when you elect for this entity to be disregarded as a separate entity from you for US tax purposes, then it is you that's paying the non-US tax. So that it's you that gets the foreign tax credit on your US tax return. Okay, so okay, maybe I should have said this at the beginning, but this is all complicated stuff, right? And
Yes.
if you haven't realized that now, then let me just kind of tell you. So there are definitely ins and outs in particular situations, and I'm kind of covering, I'm covering every possible human here in my three groups, right?
So
right.
Sort of.
So Stewart, just if I could step in. So guys, for those of you watching this, I wonder how many times your eyes have glazed over like mine.
I know.
In the last 20 minutes. Now, having said that, when you go through this is a subject that's very heavy. You need to watch it a few times.
Yeah.
And I guarantee you it's actually easier as you understand it or as you get exposed to this. And for new sellers, because many of you guys are new sellers, you don't have to worry about all of this. This is something that you're going to get into later on in your year, as you start selling. In the beginning, like we always say, just get selling. Just go ahead and start your LLC like we've talked about and start selling. But in the back of your mind, this is good education. Now, some of you are already selling and making some good money, so maybe this is more relevant for you. But this is all something that you should not freak out over and be overwhelmed by. It's good education. Learn it, bookmark it, put it on the shelf, and then as it applies to you, whatever that number is, talk to your accountant. Once you start hitting 100K or whatever it is, then this is going to be an amazing reference for you.
Right.
Yeah, and you do need to start planning a little bit sooner than that. I mean, there's at least one level of planning that should happen whenever you just start making any amount of net income. That's when you do need to get some sort of, make sure you get the right legal structure in place for your situation. But not, Naim, you're exactly correct that it starts with the LLC. So
Right.
you don't need to know all this stuff day one. Day one, you do need to know that you need an LLC. So form the LLC, and that applies to all three groups.
Right.
And then start selling, and then figure things out once the cash flow starts becoming positive, right?
Right.
So, okay. Yeah. So let's. Okay. Like as I alluded to earlier, for digital nomads, for U.S. citizens who live outside the U.S. and who don't pay tax somewhere else, the basic structure is a non-U.S. corporation with an LLC. But once you're making enough money, then there's some situations where you would want to put a U.S. C corporation above your non-U.S. corporation.
Can you roughly define enough money?
Yeah,
Right.
about $100,000 above your salary. So right around there is so your salary. You're going to want your salary to be $100,000 because that's the foreign earned income exclusion cap.
Right.
You're going to want to max that out. And then once you're making another $100,000, that's about when you would want to use a USC corporation.
Okay.
And so this is the only time you're going to see USC corporations. It's not a good idea for resident Americans for the reasons we talked about before. It's also a really terrible idea for non-resident Americans. Okay, I'm sorry, non-resident aliens. Okay, so let's go over to non-resident aliens. So non-resident aliens, wake up. We're now talking about you. Okay, so we've got our friend the LLC, right? So this is why I mentioned that all the different groups kind of blend into each other, right? So remember when I was talking to the Americans who live in the UK, I said go talk to your UK, chartered accountant, they call it over there, right? And ask what they do. Well, that's what you need to do as well. Go to your Australian chartered accountant and say, do I need an Australian company or not? In Australia, they do all kinds of stuff with trusts and all kinds of fancy, complicated stuff. But the base of it is the LLC, right? So just like Naim said, form the LLC, open the Amazon account in the name of the LLC, start selling, and then at some point you go talk to your tax person where you live and figure out what's the best legal structure for you there, and then you slap the LLC underneath that. So this is an easy process. You would simply, so if you start here and create the LLC where you directly are the sole member of the LLC, then down the road, once you're making some more money, and it makes sense for you to have some other legal structure where you are, then you would simply contribute your membership interest in the LLC to your local company that you use. Okay, so yeah, so that's the main idea here. And so U.S. tax is easy for you because you're not gonna have to pay any U.S. tax. Okay, as long as you're not engaged in a trade or business in the United States, or ETBUS for short. And we'll talk more about that in a second. This is something that confuses people unnecessarily. Okay, so remember we talked about earlier that one of the key facts that drives tax is where the business occurs, which is where the people are who run the business. If you're waking up in Australia every morning and you're working on your Amazon business, well, you got to pay Australian tax on your income from that business, and you don't have to pay U.S. tax as long as you don't have your own people on the ground in the U.S. As long as you're not engaged in a trade or business in the United States. So I wish the U.S. law on this was written more clearly. How the law is written, it's a little bit complicated because the U.S. is kind of trying to account for lots of different fact patterns. But it absolutely is the case that you're not subject to U.S. tax as long as you don't have your own people on the ground in the U.S. Sometimes people get confused and they think that you are subject to U.S. tax. But another point here, though, is that if you're in Australia and you're subject to Australian tax and you have an LLC in the United States, a lot of times people think, okay, I'll keep the money in a U.S. bank account or in like a Mercury.com account in the name of the LLC, and I will only pay tax here in Australia whenever I bring the money back to me. Well, that's not how it works either, okay? I wish it worked that way because one of the things I do for a living is set up LLCs for non-Americans. And if it worked like that, I would, my phone would ring off the hook and I would be selling LLCs to every single business owner in Australia and everywhere else, right? But unfortunately, you should expect to have to pay income tax in the country where you live on your net income from the business, no matter whether you take all the money out of the LLC and bring it back to you, or you leave all the money in the LLC and reinvest it in the business. Okay, so that's one common point of confusion here. Okay, so let me define ETBUS. You would be engaged in a trade or business in the United States only if two things are true. One is you have your own employees or other dependent agents, and by that I mean like someone who works for you. Okay, that's the idea here. I'm trying to avoid terms like if I just said employee, if I just said don't have an employee in the U.S., then people would say, oh, so it's okay to have an independent contractor in the U.S. No. So the answer is what I'm trying to tell you is, don't have your own person on the ground in the U.S. who does something substantial to further the business in the United States. So it's okay to have your own person on the ground if they're like just keeping the books or kind of doing a little tiny thing. But in general, I mean, most Amazon sellers I run across, they don't have anyone on the ground in the U.S. And so this is not really an issue. Okay, so all right, let me throw one little twist here at the end, and this is something new. So here pretty soon, I think in September, Amazon is going to publish the owners. It's going to publish like the names of who's behind the sellers, right? So
yeah, everybody's freaking out over that.
Yeah.
That's a good point that you brought up. I'd like to hear what you have to say about
I know.
Yeah. So
Yeah.
And so this gets into Amazon policy and Amazon procedures and stuff. So it makes me nervous to talk about this stuff because obviously, we're not talking about law, that's my thing, right? But we're talking about what Amazon is going to do, and that's not my thing, right? So, but here's a structure that a lot of people are at least talking about that I think, makes some sense and would work, I think, right? But so remember, let me go back a couple of slides. So normally, if you don't have a legal entity where you live, then normally it would just be you as the sole member of your LLC, right? Or if you do have a legal entity where you live, you would have your legal entity where you live, and then you'd have the LLC below that. In both cases, the LLC is a disregarded entity because it's a single member LLC, right? Okay, well, the new twist is that, well, let's make this thing a partnership for U.S. tax purposes by adding another owner. So now we've manufactured this thing into being a multi-member LLC, right? So you're one member your Australian corporation or whatever, wherever you live, is the other member. And by doing that, the LLC is now a partnership for U.S. tax purposes. There's still no U.S. tax to pay because remember from before, if you were awake, if you didn't glaze over too much back when we were talking to other people, a partnership does not itself pay U.S. tax. So it's the same thing. As long as you don't have your own people in the U.S., there's no U.S. tax to pay. It's just that a partnership is not technically a disregarded entity. Technically, a partnership is a U.S. person. And so whenever you do the Amazon tax interview, let's illustrate it like this. Whenever you do the Amazon tax interview in this legal structure, then you form the LLC, you open the Amazon account in the name of the LLC, you have a bank account in the name of the LLC. But whenever you do the tax interview, you have to look at the structure from a tax perspective, and the LLC is a disregarded entity. So you're going to tell them, "Hi, my name is Bob. I'm Australian, and here's my address," right? And that's what they're going to publish, apparently, is what I'm hearing. So, but whenever you do the tax interview with this structure, you don't say, "Hi, I'm Bob." Instead, you say, "Hi, I am, ABC LLC. It's a partnership for U.S. tax purposes, and here's the partnership's address," and that's what they publish. Okay, so that's something to think about here. The reason this structure is not used now is because a partnership has to file a partnership tax return in the U.S. and there's still, again, no tax to pay. Substantively, there's still no U.S. tax to pay, but a partnership tax return is a little more annoying. It's a little more complicated to file than the easy form that has to be filed by an LLC that is a disregarded entity. So this is something I'm kind of just starting to get into, but it seems like this might be sort of the wave of the future because of the new disclosure requirement. Okay.
Gotcha.
That's helpful.
Okay, I've got some tips. I got some tips and tricks here for asking questions. Just I found I do a lot of these webinars and Q&As and things like that, and I've just kind of found that I'm better able to answer your questions if you ask a better question, right? So remember, life is different for each of our three groups. So I need to know who you are, and then I think like this kind of format. Sometimes people just start typing, and this kind of format. I think I haven't gone back to the chat, but it's gonna be better if your question's in one nice chunk, okay? And then this one kind of drives me crazy. Like I'm a tax lawyer, so I'm kind of pedantic, right? And so whenever there's a not in a question, it kind of just like it like ties my brain in knots or something. It just doesn't, for some reason, a question just doesn't work when there's a not in it. I just kind of noticed that. So, okay, and then I'm gonna go. We're gonna dive into these questions here, and I'm gonna do what I can do. But sometimes, your particular situation, we're gonna need to talk about, deeper into your situation, and so you can book a consultation at this link right here, and whenever you go to that link, you'll see I've got an online calendar, and then you'll see everything in there. So all of my availabilities on that calendar that you see when you click through that link. So that's the easy way to set up a consultation.
Right.
All right.
Awesome.
Let me.
Awesome. So, all right, appreciate it, Stewart. So we've got some basic questions that students or members have asked previously in other posts and stuff like that. So we'll just start with that.
Okay.
So I think the big one is you got somebody in Ukraine or Russia or Pakistan or wherever they are, and they are trying to set up and become an Amazon USA seller. So again, I know things are very specific to the individual and their status and all that, but at a general high level, can you kind of walk through the 2, 3, or 5, 6 steps of somebody sitting in one of those foreign countries, what they would need to do to be able to set up a structure and start selling?
Yeah. So this is one of those things that, like everything you do in life, there are different ways to do it. Okay. There's kind of generally, I found with most things I do, there's kind of 3 different paths. Path 1 is completely do it yourself. So go learn on the internet how to form an LLC and go kind of and all that kind of stuff and do it yourself. Path 2 is to use services that kind of do some things for you, and then path 3 is to kind of get the full service like white glove, done for you experience. Okay. So, obviously the third path is me. I have a service of forming LLCs for non-Americans, and it involves setting up the LLC, and then it comes with mail scanning and forwarding service so that you have an address in the U.S. you can use in connection with your business, and anything that's sent there gets scanned in and emailed. And then the next step is we get a U.S. tax identification number for your LLC. It's called an EIN, stands for Employer Identification Number. And then the next step is we get another U.S. tax identification number for you individually. It's called an ITIN. It stands for Individual Taxpayer Identification Number. And that name is kind of scary because it's got the word taxpayer in the middle of it, so it kind of sounds like you're signing up to be a taxpayer in the U.S. But you're not. It's just a number, And then it comes with filing the IRS Form 5472, which I didn't mention previously, but that's the form that's filed by a disregarded entity LLC. And then I think previously I've been farming out, whenever I have form LLCs that are partnerships, I've been just referring people to a CPA I work with to do the partnership return. But I think I'm going to start doing the partnership return myself, because I think I'm going to start doing a bunch more partnerships. So that'll be included as well. It also just comes with, answering any questions you have. So, through email or by getting on the phone or whatever, on Skype, So, but yeah, if you want to do it yourself, you can. It's just one of those things where it's going to take time. You're going to have to figure things out, and it's a little bit complicated. Now, just to, I don't want to just sell my service. I mean, just to kind of throw you a bone for the do-it-yourselfers. Like I mentioned, there's an LLC statute in every single state. So you have 50 options for where to form your LLC. And I like Wyoming. Okay. So just like I mentioned, where I like Belize for non-US companies, I like Wyoming for LLCs. And the reason is, it's the original state that came up with the LLC. Everything is done online. So it's not affected by, staffing levels due to coronavirus or anything like that. It's all done online. The annual report is very simple. It's done online as well. You just have to log in, and then you fill in a blank with the value of your LLC's assets that are in Wyoming. So you're going to put a big 0 in that blank, and then you're done with the annual report. Other states, it's done on paper and it's complicated. So,
and it's really fast, and it's relatively cheap.
Yeah.
And also confidentiality, right? That's a big thing with
exactly.
Privacy.
Wyoming does not have a public register of the members or managers of a Wyoming LLC, so it's all private. Now, the other state that a lot of people hear about is Delaware.
Right.
And the reason you hear about Delaware is that in law school, I went to law school in Texas. So I learned Texas law and Delaware law when it comes to corporations and LLCs and things like that. And so Delaware has this separate court system called the Chancery Court that goes back to like the 1700s. And so there's a lot of Delaware law on these sorts of issues. So that's, lawyers love that when there's a lot of cases on stuff, we get all excited about it. So that's why Delaware is sort of the default for multinational companies and things like that. But that rich history of Delaware law doesn't do you any good when you're selling on Amazon. There's a $300 a year franchise tax that you have to pay to Delaware, and it's just not worth another $300 a year. So that's why I like Wyoming.
Right.
Good point. So just to walk through it, so you basically
now, how long does this whole process take?
Yeah, so forming the LLC is instantaneous, because it's done online. So, with my clients, I get some information, and then I send you paperwork, and then you sign the paperwork and you send it back to me, and then it's done the next day. And then getting an EIN takes 2 weeks. So that's still a paper process. And actually, right now, for people who are watching this live or, still during like the summer of 2020, there's a bit of a backlog because the IRS closed down for a while, so they weren't processing EIN applications. So, but normally it takes 2 weeks, and that's a pretty regular, not much sooner than that, not much later than that. And then getting the ITIN takes about 4 weeks to get.
And is there any delays on that, on the ITIN?
Yeah, actually, right now it's just they're not even doing them right now, so they haven't even started. So yeah.
Okay. So just to understand, you basically help create the file for the entity, the EIN, the ITIN, basically setting up the entity and the related structure there.
Yeah.
Now, what about the next step? You need the bank, you need a local address,
Right.
you need a credit card, etc.
Utility
Well,
bill.
so way back before like middle of 2016 or late 2016, part of my service included opening a bank account remotely. So for the LLC, so I had all kinds of contacts at Citibank and Bank of America and all these places, and we would open a bank account. Well, they changed the law, and I think they went backwards 50 years basically, but like banks are now required to like look you in the eye, and before they open a bank account. So if you want to open a bank account at a U.S. bank for your LLC, then you're gonna have to walk into a U.S. bank. So that used to be difficult. Now it's impossible. I think it's still impossible at least for people in most countries. So what a lot of my clients have been doing, instead of opening an account at a U.S. bank, they've been using a service called Mercury.com. And so Mercury is not technically a bank. Like if you look at their website, it says we do banking services for tech startups. But the tech, you just ignore the tech startup part. Like whenever I first learned about them, I sent them an email and said, hey, look, I help all these Amazon sellers. You're talking about tech startups. Well, what about an Amazon? And they said, no, that's fine, that works. So,
Right.
So I don't know why it's just advertising it, and then they say they do banking services. So that technically they are a company that's they're like PayPal or TransferWise. Like they are a money service business. They are not a bank. But how they do their banking service, it looks exactly like a bank account to Amazon. So your LLC opens a Mercury account, and then you give the banking details to Amazon, and then Amazon puts money in that Mercury account. Then you take it out and put it in your local account, or you use Mercury to send it to your manufacturer or your supplier. So it works exactly like a bank account. So it really is. It really has been awesome. The Mercury has problems with certain countries. That's the only issue I've had with them. I had some clients in Russia, and Mercury said no Russians. So
Oh wow.
I don't know what that list is. It probably changes. It probably so that's the only issue I've seen. But yeah, Mercury works great. I mean, and that's kind of one of the benefits of Amazon too. Like if you're trying to sell on your own website and you try to like do a Shopify store or something, well, now you've entered the world of payment processing. Okay, now you need you got buyers out there that want to swipe their credit card, and you need a way to turn that plastic into cash in your pocket. And turns out that's hard to do. So it's like, yeah, you pay a whole bunch of fees to Amazon and stuff, but that's one of the things they do, and it's a pretty cool thing. It's kind of difficult to do on your own. And now, I mean, the U.S. payment processors, I think they got burned one too many times by some non-U.S. sellers and things like that. So it's becoming impossible to do that. So anyway, so that's one good reason to sell on Amazon.
Now I've heard TransferWise also has some services, but I'm not certain.
No, it's Payoneer.
Payoneer.
Yeah. I think both of them work. They're slightly different, and before Mercury, that's what a lot of my clients use, but now it just kind of seems like everyone's using Mercury, because with Payoneer, you pay a 2% fee on every dollar that runs through your Payoneer account. Well, with Mercury, you pay $30 for a wire transfer, and that's it. It really
got it.
Okay.
And just to kind of round out,
okay,
we've been talking mostly about like
good to know
what I do for helping non-resident aliens, but I've got a similar package to help Americans who live outside the U.S. I do it slightly differently in that it's not like a white glove service. Instead, it's more of a showing you how to do it, but it's still, I guess it's a gray gloves or something. I don't know. Is that the right term? No, it's not the right term. But anyway, so I still have a way, so I can still help. Americans who live outside the U.S. set up the legal structure that we talked about, the Belize IBC and the Wyoming LLC.
Yeah.
Now, the people I can't help are you Americans who live in the U.S. Okay, so that's just not my thing, right? I'm an international tax attorney, so you need to talk to a CPA where you live. And like every once in a while, I do a consultation with an American who lives in the U.S. who's heard about Microsoft and Apple, like doing some crazy stuff with the
right
sandwich and the iris structure, and like they want to do that too. And the answer is it doesn't work unless you are Apple or Microsoft. You know?
Right.
Exactly.
Yeah.
Right.
Got it. Well, we got a couple of quick questions for you, Stewart. We
Yeah.
don't want to keep you too long. We know you're busy, but we'll wrap up with 2 questions from our viewers. So Munawar Khan is asking, he's a non-resident of U.S. He says, I have a USA LLC and a resale certificate for an existing business. Can I use the same for selling stuff on Amazon? If I procure stuff from overseas to sell on Amazon, can I invoice USA LLC from an Indian LLC? So there's a couple of things going on in there. A little,
Yeah.
yeah.
Okay,
That's quite complicated.
Yeah, so the first question is, can you use the same LLC to sell on Amazon? And the answer is yes, but maybe you don't want to. Okay, so yeah, you could use the same LLC for all kinds of different businesses that you do, selling on Amazon, and if you start like a website that or whatever, I mean, all kinds of different businesses. But remember that one of the reasons to have a legal entity is that it limits your liability. And so if like, let's say something goes wrong with the product you're selling on Amazon and someone sues your LLC, well, you wouldn't want them to be able to take down the whole ship, you know?
Right.
And so if that LLC owns a whole bunch of other stuff that you have going on, then, you know, it might be a good idea for you to form a new LLC to sell on Amazon through.
That's a good point.
And okay, and then the other point. So let's see. When you talk about the resale certificate, you know, you'll need to get a resale certificate in each state where you buy products from. So I wasn't sure whether I should get into the whole topic of sales tax. It's a little bit complicated, but if you are sourcing products from the U.S., if you are buying from a U.S. supplier and you don't want to pay sales tax whenever you buy that product, well, then you can obtain a resale certificate in that state. And so, you know, so yeah, I mean, I guess there's sort of a push and a pull here. If you've already done the work of getting a resale certificate for your existing LLC, and you will buy products from that same state for your Amazon business, then you would want to use the existing LLC instead of starting another one. But, you know, getting a resale certificate is not the most complicated process.
No.
I mean, I
Right.
think it'd be best to have a new
Right.
LLC and get a new resale certificate.
And TaxJar can help with getting a
absolutely.
resale certificate.
Yeah.
And then I guess the last point about invoicing. So this is something I used to never understand whenever non-Americans would ask me questions about invoicing. I'm like, what are you talking? Why are you even asking me about invoicing? And then I learned that invoicing in other countries is a very complicated thing. Like in other countries, like a lot of times the invoicing system is tied in with the local tax system and is tied in often with the banking system. So like the world kind of works together. Well, in the US, it's all loosey-goosey. And so invoicing in the US is just a business thing. You know, an invoice is just a way that one business tells another person to give them money, you know. So it's not tied in with the tax system. So whenever you say, can you invoice, you know, the USA LLC from an Indian LLC? Sure, you know, because there's nothing tax related or legal related in the US with an invoice. It's purely a business matter.
Awesome. Okay, so next question is from Mudassir. He is actually in Saudi Arabia. He's a student of ours, actually.
Right.
He's asking, how about having U.S. address for a non-resident alien? Amazon is very famous now for asking for a proof of address via bank statement, credit card statement, or utility bill. Yeah.
So, you know, so part of this gets a little bit difficult for me to answer because we're kind of getting into Amazon policies, but also I'm not sure how this will change with the new twist that we talked about, but how things have been working before with my non-US clients that I set up LLCs for is that typically whenever they do the Amazon tax interview, they provide information about themselves, and so therefore they provide an address for themselves. And so if they are selected for like extended review, then they provide things that are at that address, and it seems to work. So
you mean their foreign address?
Right.
Right.
So,
Okay.
So you know, I have seen situations where Amazon does seem to ask for more, you know, for more information, but yeah, I mean, that's sort of like kind of gets into the weeds on Amazon policy, and it's not really stuff that I have any great deep, insight into.
Got it. Got it. Okay. And we got one last question, if we can squeeze this one in. Arlene is asking, I'm a U.S. citizen living in California. My Amazon business is a C Corp. Looking to live in Portugal. What would be the best setup for me? So a bit of a general question there.
Yeah. So you're going to switch groups on us here. You're going to go from being a resident American to a non-resident American. Yeah. So, okay. And, so you said it's in a C corporation. This is one of those things where, like, I just met you, Arlene, so I don't want to doubt what you're telling me. That'd be sort of rude, right? But like I mentioned before, I mean, it's very common to use an S corporation, it's very uncommon to use a C corporation. Now, maybe it is a C corporation. That would be unusual, though. Okay, okay. So as you probably know, if you've been researching moving to Portugal, Portugal has this thing called the non-habitual resident program, or the NHR program. And the cool thing about the NHR program is that all you have to pay in tax in Portugal is a 20% tax on your salary from a non-Portuguese company. Okay, and so you don't have to pay Portuguese tax on dividends from a non-Portuguese company. Okay, so let's say you kept your current structure in place. Well, you would pay a 20% tax in Portugal on your salary, and if your salary is under $100,000 and you qualify for the foreign earned income exclusion, you would pay no U.S. federal income tax on that salary. So basically, you would be taking your total worldwide tax rate on the salary portion down from, U.S. federal income tax plus California tax down to only 20%. And so you might be depending on how much you're making, I mean, you might be cutting it in half, basically. So that would be good. Now, this is where things get a little bit complicated. In general, you would not be making any difference on the net income above your salary. So you would not be paying tax in Portugal on that income, but you're still a U.S. citizen, so you would still be paying U.S. federal income tax on that income. Okay, but different fact patterns are different. Like if you happen to be married to a non-resident alien, or someone who will become a non-resident alien once you move with them out of California, that would be very handy, because then you could do your business through a non-U.S. company that they own half of and you own half of, and then you could at least defer paying U.S. tax on the income by leaving the money in the company. That's a very specialized fact pattern, but I kind of just mentioned that to illustrate that different situations are different. It also could work for you to instead of using a U.S. company to use a non-U.S. company for your business, and that could have some additional tax savings. Mainly that you wouldn't have to pay U.S. employment taxes, because right now you have to pay U.S. employment taxes on your salary from your corporation, whether it's a C corporation or an S corporation. But again, that gets sort of specialized. You would need that would only work if you don't have any employees in the U.S. And also, it would really probably only be a good idea if your business is sort of young and not extremely valuable at this point. Okay, so anyway, so this is something that we could talk about in more detail, like on a consultation. Once you kind of firm up plans to move. Awesome.
Well, yes. Hey, Stewart, thank you so much for your extremely valuable time. We definitely appreciate tons, and I think this is a video you got to watch like 5 times, because there's just so many gold nuggets in there and details and all of that.
Yes.
So it's a good reference video to bookmark and save.
Totally.
Yeah, I know I have to often go back and refer to this, because you're right, it's very complicated. Having said that, for new sellers, again, this is not something you should be overwhelmed by. When I started selling, and I think, Eva, same for you, we didn't look into all this. We just created an LLC, just jumped in and went ahead. The point is get the money going, right? Get the sales going, get the revenue going. But this is good information for new sellers in the back of your head, refer to, et cetera. Make sure your structure is right. Like Stewart mentioned, that's critical. Make sure that's correct, and talk to your CPA or your accountant to get that going. And then I'll add one more point, and then Eva, if you want to close it out, that would be great. And that point is, Stewart is our international attorney.
Yeah.
However, guys, there's no affiliate program here. You know, we're not incentivized if you go to Stewart, you know, et cetera. I mean, he's an attorney, so this is purely for information only.
Mm-hmm.
And we're sharing this for you. We're not pushing for the service, but for some of you, we know this is going to be relevant. So just go to his website and take a look. ustax.bz, right?
Yep.
Yeah, ustax.bz. And he's got a lot of great information there. He's got a great blog there. I highly recommend you read. There's a lot of good information that you can read in those blogs specifically for Amazon sellers. So highly recommend that.
Right.
So again, thank you so much, Stewart. Appreciate your time and all the great information that you shared with us. And
I know I learned a lot as well.
Yep. And if you guys are in that situation and you need the help, just book a meeting with them and, you know, go from there.
It's easy.
Thanks for having me. I really appreciate it.
Yes.
Absolutely.
Thank you, Stewart. Thanks.
Absolutely. Thanks again, guys.
Awesome.
Take care.
Take care. Bye.
Bye. Bye.
Bye.